Hi everyone, welcome back to Xrax. The gold market remains in the spotlight as spot gold is trading around US 4,004.35 per ounce dollar, reflecting a fresh sur- surge after the second cut rate of the Federal Reserves and ongoing global uncertainty. This rally has been driven by multiple factors: safe haven demand, central bank buying, and weaker real yields. Let's break down the key drivers. First, central bank demands continues to be a major pillar. Rival central banks are increasing their gold reserves, seeking protections against currency risk and inflation. Second, from a micro perspective, the rate cut by the Fed pushed the US dollar lower and real bond yield downward, which tend to the boost of the appeal of non-yielding assets like gold. Third, geopolitical and trade tensions remain elevated. Uncertainty around US-China relations and global growth worries and encourage investors to move toward gold as a safe haven. However, it's not all one way up. Some warning signs are emerging. Technically, gold is facing resistance around the US 4080 4,140 ozone US dollar and some support levels around US 3,900 to 3,950 ozone dollar. If the US inflation data economic growth figures surprise on the upside of if real yields start to increase, when the gold could see a pullback toward the US 3,700 to 3,800 zone Oz area dollar. On the flip side, if the safe haven environment intensifies of central banks of accelerate purchases, we could test US $4,500 plus in the medium terms. What it means for you and your audience. For the long term investors, gold remains a key hedges in portfolios. With the price already elevated, this might be a phase to accumulate gradually rather than chase a sharp jump. For traders watching macroeconomic data like US inflation, Fed meetings, central bank announcements, and major geopolitical events in critical, these will drive near-term move. For the journal reviewers, if you are considering buying gold, beware that the current price is near historic high. The timing and risk management matters. In summary, the gold market today is riding a wave of strong momentums, but it's also at a decision point. If the sporty factors hold, safe haven demands, weak real yields, central bank buying, gold could climb further. If those start to fade and micro conditions improve, a correction could follow. If you find this update helpful, like this video, subscribe to Xrax and hit the bell icon so don't miss our next update on global markets, energy, crypto, and more. Thanks for watching. Stay tuned.